Good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 1st October 2020. In the international market, the US presidential election debate yesterday did not have a conclusive winner, though the existing president, Mr. Donald Trump, had an upper hand. With this hope, Dow Jones was up 1.2% and Nasdaq was up by 0.74 percentage points. Expectations for progress on a new fiscal stimulus bill gave a jolt to the bond market, pushing yields higher. On the positive economic data front, US private sector employment rose by 7.49 lakhs jobs, its highest in 3 months. Pending home sales for August rose 8.8% in August as compared with July, hitting a new all-time high. So with better than anticipated economic data and revived hope for new fiscal stimulus, the US 10-year benchmark was up 3 basis points, closing at 0.69 percentage points, and 30-year benchmark up by 5 basis points, closing at 1.46 percentage points. In the crude oil market, nothing major in the crude world and trading stable at $40.95 per barrel. Our stance still stays neutral. In the currency market, dollar index is at 93.73. The new dollar range seems at 93.51 to 94.04. USDCNY moved up and trading at 6.79 from yesterday's 681. USDINR with a high of 73.87 closed at 73.76 yesterday. USDINR's today's range seems at 73.50 to 73.75. Exit range will be available once the market opens. Talking about the domestic market, government bond prices rose yesterday on speculation that the RBI was actively purchasing bonds in the secondary market in a bid to bring down the yields. This was seen in another large purchase by others who bought G-Secs worth Rs 4,688 crores yesterday. 577 GS 2030 closed at 601. Some participants speculated that the entire stock of the 10-year benchmark 577 2030 bond that was devolved on primary dealers on Friday may have cleared because of RBI's secondary market bond purchases. The much-awaited borrowing calendar was announced yesterday after market hours by Department of Economic Affairs Secretary Mr. Tarun Bajaj. He confirmed that there will be no additional borrowing for this fiscal year and government will stick to its planned 12 lakh crore borrowing program. Central government has already borrowed approx rupees 7.7 lakh crore and hence it will need not to change anything, and the remaining 4.34 lakh crore borrowing program will stay as is. He also mentioned the following facts which we need to pay attention to. Due to COVID-19, government will not be able to achieve its ambitious disinvestment target of 2.21 lakh crore and so far has raised only 20,000 crore in the disinvestment. He also rejected the idea of debt monetization. Tax revenues in April to August period were at only 17.4% of the full year budget and non-tax revenues at 22.4% of the full year budgeted estimates. The expenditure, however, is at 41% of the full year budget. Hence, Aditi Nair, economists at ICRA, estimates with reduction in tax, non-tax revenues and disinvestment proceedings, revenues from the budgeted amount will fall short by rupees 6 lakh crore. This makes the fiscal deficit number to shoot up to 14% of the GDP, which is anyway estimated. We are also not counting the additional money required by Government of India to procure COVID-19 vaccines if available before March 21. In short, markets will be positive today and may open gap up, but the fiscal deficit worries remain, which we can't get away with. We will analyze how our borrowing calendar strategy worked when we advised our clients to sell since the first OMO announcement when the market touched the low of 590 levels. One last point to make is, as the inflation data is due on October 12, we may see MPC meeting from October 12 to 14, giving the MPC committee enough time to react to the new CPI. We are anticipating new MPC members list to be announced this week. No official confirmation yet. Thursday's OMOs will be there. Today and night research will be available at your service with cutoff ranges. If you haven't subscribed to these services, you can reach out to us on 9930307466 or at research@nightfintech.com.